Bridge loans are basically interim loans or temporary loans. That means they have a purpose to bridge the gap for an investor who needs to get from, let's say, A to Z, but has a situation where he needs a bridge. He needs a temporary or interim loan. A few examples of a bridge loan is a developer who is going to buy land, but first needs to entitle that land and get permits to build on that land. Ultimately, the buyer wants to buy that land and eventually is going to do construction, so he's going to need a construction loan. But if the land's not entitled, he can't get that construction loan. So what does he need? He needs a bridge lender. A bridge lender will come, help the developer to buy and secure the land, allow him time, whether it's 6 months, 12 months, to entitle the land. Once the entitlements and the plans have been approved, that's when the developer will go to a construction lender and ask the construction lender to provide the construction loan, and that construction lender will end up paying off that bridge loan. Also, another example of where a bridge loan is needed is for a fix and flip investor. There's fix and flip investors who need financing to help secure the purchase on the fix and flip investment, but they have their own rehab money. So they don't need rehab financing because they're going to self-fund the rehab. So what they'll say is, hey, I need a bridge loan for 6 months or 12 months because let's say that's a typical turnaround time to do a fix and flip investment. So that's another example. A third example of a bridge loan is, let's say a builder now buys a land with his own money, goes and gets a construction loan to build on that land, will start building the land, and let's say he's 98% done, but now that construction loan comes due, it matures. It needs to be paid off, but the developer has some setbacks, had some delays on the construction and needs more time, but the construction lender is not willing to extend the loan. What does he do then? Right now, he's not ready for a permanent loan because the project is not fully complete. He still hasn't got the final sign-off. He still hasn't received the certificate of occupancy from the city. So he'll come to us and say, hey, I need a bridge loan to pay off the construction loan for 3 months because let's say in 60 days, I'm going to complete the project. Then I'll go to a bank, a traditional mortgage lender, and get a 30-year fixed refinance loan and pay off the bridge loan. So usually a bridge loan can actually end up being needed in the beginning of an investment when they're acquiring the land. Also at the end of an investment when let's say they're finished or they're 99% done building a project, but they just need that gap of another 3 months to 6 months before they get into a permanent loan.